Hey, how's everyone doing today?
Can you hear me?
Hey, Johnny.
Hey, okay, great. Sorry, I was having a microphone or headphones issue, but that is working a lot better.
No problem. No problem. Excited to be on the line with you here today.
Yeah, likewise. I love your backdrop.
Yeah,
It's
yeah.
cooler than mine.
They have a whole list of them you could choose from now, but I only figured the New York Stock Exchange would be appropriate for the caliber of our conversation today.
I'm on it.
Perfect, perfect. And what part of the world are you in this morning?
Here in San Francisco right now. So we're in, lockdown, shelter in place, crazy times we're living in. But
Yes.
we're hanging in there on the WeFunder team. We're actually seeing a massive surge in interest from founders. I think both from startup founders that are seeing conventional sources of capital like VCs and angel investors drying up. So I think then our platform looks relatively more valuable. And obviously, a digital fundraising platform versus in-person meetings
Sure.
is you know, also more attractive in this day and age. And then also from small businesses. So we launched a crisis loan to focus on Main Street businesses like restaurants, coffee shops, breweries, and bars that have had cash flows absolutely destroyed over the last few weeks. And so we launched a 3% interest loan, super generous for the small business owner. And so we have had hundreds of applications for that. We're launching an accelerator to help startups tackling COVID-19, either directly or indirectly. We have a bunch of Y Combinator alumni founders who are going to be mentoring the startups go through that. We have over 2,000 applications for that. So it's we are both, I think, seeing a lot of growth, which is interesting from a business perspective, but also I think WeFund as a B Corp or a public benefit corporation, we're all pretty mission driven people. So all of us are quite galvanized right now by this company's and this model's ability to hopefully try to mitigate some of the economic catastrophe that is befalling us right now.
Absolutely. Absolutely. And I know it's more of a fireside chat format versus a one-on-one interview. Could you actually elaborate more on the B company? Because I always have found it fascinating. It's so relevant for the times.
Yeah, absolutely. So there's two things. So WeFunder is incorporated as a public benefit corporation. So you can legally incorporate as a C Corp, an S Corp, an LLC, or now a public benefit corporation. So we're a Delaware PBC. And this means that legally, rather than being obligated to maximize shareholder value, which a C Corp is, we're legally obligated to uphold our charter, which you can read at wefunder.com/charter. And so that charter talks about defending the American dream, which is, I always find ironic that me, the English guy, is talking about defending the American dream. But it's like using democracy to get more capital flowing to startup founders that aren't white men in San Francisco, or enabling ordinary people. And by the way, as a white man in San Francisco, that's another irony. But also enabling ordinary people, middle-class Americans, to be investors in small businesses down the street from them, or startups whose founders they know, rather than just millionaires and billionaires. So there's a lot of cool stuff wrapped up in our mission, in our charter, our public benefit corporation charter. And then B Corp is a different thing. That's an organization that basically accredits companies who don't need initially to be public benefit corporations. But so then they get that black B Corp logo, which you've probably seen, and we've seen some good kind of pickup from a marketing perspective. So having that B Corp logo, I think that has kind of made us more discoverable. And if there's other B Corps, they like the fact that we're a B Corp. So in terms of the legal incorporation, it's the public benefit corporation that has the teeth. But in terms of marketing benefit, I think the B Corp logo has probably done a little bit more for us. But we are both.
Absolutely. And because we're seeing social impact playing such a large role in the investments, in the rounds that we're running today, had to ask. Also wanted to get more of a feel. You're up in San Francisco. You guys went on lockdown before us. I imagine you saw the list of calendar invite declines to follow with funds, various types of VCs, angels, and that is a theme today with equity crowdfunding, correct? That is why we're seeing more traction on these digital portals versus more of the traditional route, right?
Yeah, I mean, it's quite a complicated picture. I'll try to unpack it a little bit. So, and I wrote a blog post, I'll put it in the chat if people are interested in going into a little more detail. But, March 2020 was our biggest ever month for investment volume. We're only 2 or 3 days into April, but it's shaping up strong as well. So you would look at that and say, oh, great, like WeFunder, totally resilient and robust and, doing fine when the conventional economy is crashing. I don't think that's right. I think that's a little overly simplistic. In March, we had a couple of great companies do very well. Lost Spirits is a distillery down in LA. Pretty amazing place. I'm sure they are really struggling right now because they're all about in-person sales and events. But Playboy magazine described them as the Willy Wonka of booze. And it's just a unique experience, like amazing business. Customers absolutely love it. And so when they sent one email to their customer base, they raised $1 million in a day on WeFunder. And so, them doing very well in March was certainly a big part of the reason why that was our biggest ever month by 25%. We also had a few companies closing in March and April. We're going to have a few companies closing. Usually there's a surge in fundraising towards the deadline of a campaign. So if you tease those things out, then this is guesswork. I've dug into the data a little bit, but there's no counterfactual, and there's quite a lot of noise in the data, so it's difficult to say confidently. But my guess would be we're seeing a 20 to 30% slowdown in like-for-like investment volume. So if, for example, the same company, closed their campaign in January 2020 versus March, April 2020, my guess, my intuition, not super based on data, is that they would raise 20 or 30% less now because of general kind of withdrawal from investing and stock market going to zero. So people's wealth goes down. So then they say they have less money to invest in startups and WeFunder. There's maybe some stuff where, if the stock market's going to zero, then investing in early stage private companies looks relatively more interesting. There's probably some stuff that, like, we have some companies that are, have like either pivoted their business model towards tackling COVID or are delivery companies. We have a delivery company down in LA called Narrative Food. They've seen their revenue go through the roof, right? So there's some companies that I think are able to maybe then pitch that and elicit investor interest because they're seeing growth right now.
Sure.
The biggest thing for me is over the coming weeks and months, this hasn't even come through yet, but over the coming weeks and months, as we said before, because conventional sources of capital are drying up for founders, I think more and more outstanding founders that previously would have gone the venture capital route will come to us. And so for me, that will far outweigh the drop in investment volume on a like-for-like basis. So we actually just hired 3 people on the business development team here. 2 of them are former Y Combinator founders. Very, very brilliant people. It's been awesome to already be learning from them and have them join the team. So yeah, when unemployment is hitting record highs, we're actually hiring right now, which feels a little bit scary. But we're entrepreneurs, we're founders here at WeFunder, so it's also quite exhilarating to be betting big here and trying to help a lot of people get through this.
And that's why we found the need for this webinar so relevant right now.
Right.
Everyone's asking questions about the small business loans, talking to banks, seeing how they could get some different types of financing, whether it's got forgiveness or not attached to it. I know I get asked on a daily basis on the performance of our campaigns, be it investor acquisition, e-commerce, B2B lead generation, or various type of software installs.
What are you seeing? Are you on the crowdfunding campaigns that you guys are doing, or like investing? Like, are you guys seeing a drop at all, or like are you seeing higher CPAs, or maybe less advertisers are paying for Facebook ads and so the CPAs are coming down?
Well, advertising is actually an industry where there's movement. A lot of it is attached to that social impact. A lot of it is reflecting a brand being strong during these times. Now, that may be more of the top 100 advertisers. I could tell you my friends at different ad networks are staying very busy right now, and their day actually hasn't changed up too much. Thankfully, knock on wood for them. It is a different animal with us working at the early stage sector of
Right.
marketing, because we are in conversations daily about the best use of the funds that remain. And, in some cases, again, that's more of hitting milestones and performance metrics. So we have to play an integral role in how are they going to hit their April numbers. They don't want to just sit down, fold up shop. They want to know, how is marketing going to act as a sales utility for me? How am I going to be able to hit my growth metrics? And we've been able to support. Some verticals are booming right now. Obviously, we're seeing it on an individual basis. There's articles every day talking about home categories and things that are being purchased around the house. And on the investment side, we're seeing groups asking us how they could obtain capital and go equity crowdfunding routes. You've seen that with some of our introductions. I know we've been introducing people to Justin, a few other people on the WeFunder team about this, because there is that need. There is that emerging demand of, hey, we were talking to 10 different investors. We were getting verbals. Now we have nothing.
Yeah. It's been amazing to me how quickly that has happened. Like, really lightning speed. Like the number of people that are now coming to me and telling me those stories, it's honestly shocking to me. Maybe it shouldn't have been shocking, but I thought it would take longer to see this. I saw a chart yesterday that CB Insights posted that the number of fintech deals in March was significantly down on February, which is down on January. March 2020 was 48% down on March 2019. If you look at what happened to VC after 2008, it's not a pretty picture, and it has happened fast.
Sure. And we feel grateful. It's not black or white. Going back to your question on, hey, is crowdfunding performance up over the past 3 weeks, the past 4 weeks? By all means, it would be an overstatement to say yes. But we're watching the WeFunder campaigns. We have several clients live on there right now. We're a fan of the industry. We think, some of the big portals outside of you guys are also seeing some of the best months to date as well, which we're very happy about. We're seeing service providers expand their operations. As you guys mentioned, you're hiring. So what we're trying to do is identify pockets of performance, identify different investor audiences, different investor segments that are actually converting. We're seeing retail investors who are at home, looking at different opportunities, moving their funds from more traditional vehicles into something perhaps more long-term. But looking at their options, they're defining it to us because we have different individual and group investor friends that are telling us that they are looking for that longer play at the moment. They are looking for something that plays more of a feel-good role. I've always looked at equity crowdfunding investors and defined them in a category of experienced investors. They want to be a part of the next unicorn. They want to invest and place dollars early in on the next Facebook, if you will, given the vertical that they're looking at, of course. But by doing so, they get to play a part in that. They get to share with their friends and family. That's where the peer-to-peer marketing comes in as well, too. So we'll see an investor come in over the past few weeks, and then additional investors from the same geo targets, from the same zip codes even. So we're trying to really see where the performance is, which deals are resonating the most. I think you mentioned a couple that have to do directly with COVID-19. We're seeing it more and more common. In fact, some of the healthcare, health tech clients we've been working with are now shifting their focus to the condition and really looking to play that role and do whatever they can. We're seeing other groups emerge that are looking to set up testing, looking to identify different types of body types that are resistant to the disease and therefore can play a larger role working once those type of our rules are established. So we're seeing a need for people to organize. We're seeing the use of capital as an accelerator to those, and trying to build messaging around the clients that we're working with across the full spectrum of industries to reflect that and have that relevancy.
Yeah, right.
And, digital traffic is up. People are spending more time online. I know if you were to look at my screen time app on my iPhone, the numbers would be a bit frightening at the moment. So being able to look at digital marketing, being able to go after very specific target audience personas across all of the touch points, across the different marketing channels that we have access to, both paid via advertising and organic through content marketing, is actually a great opportunity to prospect. It's a great opportunity to retarget and take people down a user journey and get to 7 touch points. That'll historical number of people can't recall or convert with the brand until they've seen it 7 times. That's becoming easier and easier. So we're trying to find different structures that brands can activate. We're doing a video webinar here today. We're doing that for clients at the moment. We're working with brands who were exhibiting at conferences. The show got cut, got postponed. So we're now doing video advertisements with them speaking, looking to reach far more people than the physical event would, driving a landing page where they could submit their email address, and then having a live video broadcast that could produce far more people that would physically show up to their panel, to their pitch, to their keynote at a conference. And then they have a whole database of thousands of people to follow up with, already lined up with them. And what we're seeing is lower costs with much wider reach. So, going back to that concept of getting brands to hit their April numbers, getting brands to hit their May numbers, in addition to the fundraising milestones, the combination of all of that has really been the focus of our conversations with clients.
Yeah, and I think that's around like tactics, right? Like the webinars and various kind of digital advertising channels. I would also emphasize content right now. I've been emailing with a lot of our founders that are live right now, and for me, you need to be a little bit careful here. I think both because of sensitivity, and you don't want to be seen as making hay in a time of global disaster, and also because investors are not stupid. But with those two things in mind, like I said, the example of the delivery company in LA, another company, one of our portfolio companies that's live right now, Shark Tank company, make coconut juice, and their online sales are through the roof, right? And so then you can draw a growth chart, right? When it's almost like, here's the stock market and here's our monthly revenue, boom, here's our weekly online sales through the roof. And especially, and this is where investors are not stupid, right? It's like, if this is a temporary thing that you saw short term like growth in sales, then that doesn't necessarily mean that the long term fundamentals of the business are stronger. But if that is your channel, if you're selling principally online, and so this now is giving you a ton more email addresses and a ton more customers trying out your product, which you can then resell to down the line, even when we're not social distancing and the economy is getting back to normal again. There is a long-term upside there, as well as a short-term kind of spike in the growth chart. And so for me, like that content, when all that comes together, and can then be kind of the icing on the cake for me, is like, as encouraging Alex from Genius Juice to think about this yesterday, is like, in a sense, like we want narratives of optimism and hope as like humans right now, right? If the news is like overwhelmingly stories of darkness and despair, and so if there's stories of entrepreneurs who are resilient through this, hustling through this, and kind of committed to continuing to build their company and pursue their dream through the darkness, and then out the other side, maybe even stronger out the other side. Like there's some kind of icing on the cake narrative there, where it's like, yeah, we're all in together, and one way that you can kind of help America to pull through this is to yeah, invest in me, invest in the startup. So I think, like, as with a lot of crises, with the challenge and the struggle, there are opportunities.
Absolutely. Absolutely. And seeking out those opportunities, one of the biggest recommendations I'm having with groups is actually going back to fundamentals and building a strategy. Building an April strategy, regardless of the marketing plan, regardless of the fundraising we had before. I have a system called the 8-point marketing plan. I've talked about this in Forbes, and the first 2 sections are the most valuable for me because they are the research. They are the industry overview with fingers on the pulse today, because obviously doing business here in April 2020 is much different than doing business in February 2020, even more so than November of 2019.
Mm-hmm.
And competitor marketing audit. I need to know before I build a plan exactly how other brands in the space are obtaining digital market share today, exactly how they're raising funds on WeFunder, on various types of SEC, FINRA regulated platforms today, because it is moving, it is working. So being able to tap into that, having understanding of which social channels they're using, the frequency, the type of content that's getting the most engagement, understanding how often they're sending out an email, looking at what publishers are speaking about them, looking at what influencers are talking about them, who are they tagging on these different posts. We have tools to look at how much they're spending on advertising, what type of ads that they're running. My whole philosophy towards marketing, I summarize in 3 words: test, optimize, scale. It's simple yet applicable to every marketing strategy. And if I'm seeing brands repeat behavior, it's telling me that they're scaling it for a reason. It's working for them. There's something that could be tapped into there when building an April fundraising strategy. And looking at everything they're doing then gives us the inspiration to build the following 3 sections, which are target audience, marketing channels, and creative. Target audience, you heard me use the word persona earlier. I like to break it down to a fictional character that represents an audience we're going after. I can then have a much stronger relation to where they're going to be online and the marketing channels. If I can pay for ads and have a scalable presence on that channel, what they're actually going to respond to, what's going to engage them on the organic channels, and how often I should actually go after them becomes a lot more visible when I have the target audiences mapped into that type of breakdown. My history working in marketing before equity crowdfunding, before DNA in 2014, was with top 100 advertisers, and they would spend months. They would put whole booklets together on who Leo and Cleo are, which are their 2 target consumers. So when I see these steps missed, it's a big opportunity for us to hop in and really define that out. Then when we get to the marketing channels, we know exactly who we're targeting. If we're,
I guess just to ask a question of you on that. So, on the other hand, right now, and it depends on the business, I think. But for Jennifer at Narrative, the delivery company in LA, I was emailing her last night, and she's like, I know I should be, marketing my campaign, but I'm so busy, I don't have time to do it right now. So how would you strike the balance between, doing that research and kind of building that plan, but maybe at a time where, some of the founders that are on WeFunder, may be absolutely swamped right now?
Excellent question. I look at good marketing as good.
Well, you need to work with DNA. Hey.
I wouldn't
speed that one up. You knocked it out of the park.
Thank you for that. I appreciate it. Perfect. No, working with third parties is one recommendation, but I like to be creative. There's a lot of people at home right now who normally would be going into an office, normally going into somewhere, that have available time. I'm very big on team building. This is a great time to build more partnerships. This is a great time to engage people you may know offline who are at home not doing much. We have an internship program that we've developed with the local schools, and our requests have exponentially grown because students are at home looking for more to do. There's all types of ways to engage a new team, grow your team at low costs.
That's a good idea. Yeah, that's a really good idea.
A lot of value. I mean, I started with some early experience and built a portfolio at internship and low rate type positions while I was in college that I still reference today. Some of the projects I did in action sports are really where I learned. Also, I enjoy having talent around that's 22 to 25. There's studies that show some of the most creative ideas come out at that point. We've raised millions of dollars for brands on ideas, on creative that we've collaborated with some of our early or younger team members. So it's not to be discounted. But third parties are a big deal. I always recommend having some type of reference with a third party. So someone creates this marketing strategy I'm talking about, they show it to you over at WeFunder. They hire a consultant, they hire an agency, they bring on some new team members perhaps on some type of creative deal because you want to make the best use of your funds at the moment. You want to be as strategic as possible when allocating your capital. But it doesn't say that I don't have friends that I call that are marketing directors, VP of marketing other places, and say, hey, what do you think about this idea? And they do the same as well. My cohorts can serve as the strongest third parties. So I wouldn't underestimate any of that. As far as putting the research together, I love spending an hour, 2 hours, and going crazy on Google, slamming an espresso and just looking in every different angle. I'll Google case studies and find vendors who work with different brands where they're telling me exactly what they spend, the exact metrics. There's a whole growth hacking approach to research where you can do it in a smaller window of time. And I feel it either needs to be presented to you or you need to do it firsthand to actually enter the conversation. We'll have clients tell us they know everything about their industry. Never the case. Every time we work on a strategy, we're bringing new pieces to the table that are also highly relevant. We're searching on Twitter and other social platforms. We're finding brand new studies that came out, in a very small window of time leading into it. And just to finish on the strategy, after putting the creative together for each messaging, I want to really emphasize strategic partnerships. It's how I've seen things grow the quickest. If you can engage an organizer of a group, of a brand with an existing warm, loyal, responsive audience, it's a massive growth hack. Your growth model, you can really hop up into higher levels. I mentioned social impact. We're seeing partnerships with nonprofits. We're seeing partnerships with various types of groups that have aligned social interests and bringing very large audiences to the table. And these groups did not know about the raise. They did not know about the initiative until they were contacted by a group. So again, really emphasize putting together a target map of potential strategic partners that have existing pools of your target audience, your target.
Yeah. I think that's a great call.
Having a messaging sequence already put together for them. LinkedIn is underrated. You wouldn't believe some of the stuff that we're doing on LinkedIn today. You could send 100 invites a day from your LinkedIn profile, anticipate a 20% acceptance rate of the invites, a 10 to 20% response rate, which is astronomically higher than what we would historically see over email. And then the last piece I'll say about the strategy is make it algorithmic. The only way to measure anything is with numbers. So we break down by impressions, clicks, and conversions. That whole traffic pattern, what we're looking to see from each channel. So if something's not working, we don't simply say, hey, Twitter ads didn't work. We can see exactly where the performance is falling off. It's usually somewhere in the conversion rate, and therefore we have to add a landing page, add something that creates more immediacy. It could be the audience. It could be the actual ads and the click-through rate around it. But you need to be able to pinpoint where that's occurring, make optimizations, again, test, optimize, and scale, and be able to take it to the point where it could actually be a viable traffic channel for you. We're measuring this by cost per acquisition of each investor. We're measuring the return on ad spend and shooting for a 10x return on ad spend. Worked on a campaign on your platform in December. An amazing CEO over at Black Mama Teas. There was a 31x return on ad spend. When you can take those type of analytics to a founder and say, hey, we're seeing 10x. We could continue to engage this audience. There's a lot more inventory. There's a lot more advertising we could run to these groups and double the amount of conversions you're seeing. If that works, 3 to 7 days later, we can do the exact thing once the algorithm stabilizes again. That's why digital advertising is so exciting to me. That's why digital marketing can play such a large role in investor acquisition campaigns like with what you guys are doing right now. And that's why I'm so excited that we're seeing this momentum continue while we're all working from home.
How do you, a couple of questions for you on that. Firstly, a specific question, then a higher level one. On the specific question, I was talking to a founder the other day and we were trying to figure out, they have a landing page that they built on their website as a kind of like primer, like interstitial between like the ad and the WeFunder campaign.
Yes.
We're trying to figure out whether or not to put an email capture field on that or just optimize for clicking through to WeFunder. Just kind of curious on if you have strong opinions there, one way or the other. I came down in a certain way. I'm interested to hear what you would say.
So going back to my philosophy of test, optimize, scale, what I would recommend doing is creating an A/B test, a variant test, meaning driving some of the traffic through a landing page funnel, some of the traffic directly to WeFunder, and
right.
results. You have to be running the same creative, you have to be going after the same audiences, and with a large enough sample size for the A/B test. Meanwhile, you should be able to see trends emerge in about 3 to 7 days. The whole idea of a landing page is getting audiences to do one thing. You don't want them to have options and clicking to other campaigns or looking at other aspects of the business, a contact page, anything like that. You just want them to do one thing. So if you're taking them to a landing page and it serves as an elevator pitch with a hero text, a hero image, which says exactly why the audience is there, it makes it very clear, hey, this is why I'm here, because you wouldn't believe bounce rates of the first few seconds of someone landing on a page. So if you define that, if you make that very clear at the top, you follow with social proof as seen on, and it shows publishers of Forbes and Business Insider and all these places that will repurpose press releases, meaning you can buy a press release and see syndication on a whole list of different publishers. If it's followed by social proof, the engagement, as a rule of thumb, is going to be much higher because people don't trust what they see on the internet. So if they have all types of logos, if it feels like something's going on here, the listening you're going to have in the next stages is even higher. I would have a section that talks about the product, then going into more social proof, perhaps investor testimonials, perhaps some type of strategic partners that are on there that speak their credibility to even higher levels. Then I would have a section on the investment opportunity, and then a very simple lead form. Give us your email address, you will receive X, Y, and Z. Immediate value, they could submit it, but it's that elevator pitch. Then once you get them to the investment offering page, they have more details. They're able to dive in on the team members. They're able to look at the use of proceeds. They're able to see the overall revenue model. But you're warming them up with that elevator pitch before, plus you have their email address. With that,
so you would put an email on that page. That's where I came out as well.
Yeah.
Because then obviously, you can drip them a series of emails then over the coming weeks.
Yeah. Because as I was mentioning before, 7 touch points or more are generally seen before a conversion occurs. If you're able to do that on multiple channels, you're in a much better place. And if you have that email address, I could tell you 10 things to do with with an email address. You could upload it for advertising on various platforms. You could build lookalike data off of it. You could be emailing them with the drip sequence that then turns into a newsletter with weekly updates. There's so much that can be done where you lose the traffic after 30 days once you take them to an offering page. Because we could retarget with ads for about 30 days. There's ways we could actually do it for 180 days, but it begins becoming a little stale. 30 days for retargeting is more powerful. Email has a much longer shelf life.
Mm-hmm. Yeah, I agree with that. That's where I came out as well on the email capture. What about my general question? I don't really know what the specific question is, but how do you think about attribution? Like especially when you talk about 36x return on ad spend, like it's like probably some of that is driven by emails that you're sending, or a conversation that Vanessa has with an investor, as well as the ad spend. And to your point, 7 brand impressions to close a customer. So for when it comes to investment crowdfunding campaigns, how do you guys look at attribution?
Excellent question, because it is the topic when speaking with a prospective client. They will hear about what we're doing in marketing. They think it's neat, but they want to know, how do I spend $50K and get back $500K in investments?
Right.
How do I then scale that to 100 and close my Reg CF at 1.07 million? We're excited that amount should be increasing shortly to 5 million on Reg CFs. It opens up a whole new world of companies that can leverage Reg CF. Those are the questions they're asking me. I start talking about social impressions, like, yeah, that's really cool. Meanwhile, was
show me the money, as
exactly.
Jerry Maguire would say.
And I start this answer off with that because analytics, a large portion of it is storytelling. It is not concrete to say, this is exactly where you got this investor, and it was on this touch point, nothing else played a role.
Right.
It's simply not built like that. If
Right.
let's take it in traditional, or let's start with digital. If I click on an ad on my phone, then I tell a friend about something and end up investing on his computer when I get there, $500 minimum, I'm putting it in. It actually won't count as a conversion in that type of scenario. If I'm using a certain browser, it won't count as a conversion. If the window is too long, it won't count as a conversion. Therefore, I can't optimize towards what's working in the analytics. And this goes back to traditional as well too. If I heard an ad on the radio on the way to work, read about it in a newspaper at the office, saw a TV ad, and then someone came door to door, the door-to-door person's going to get credit. Meanwhile, there's all of these other parts that occurred in my user journey. That is the overall thesis of digital marketing: is what is your user journey? How can you identify different elements of that user journey to scale that will produce actual results? I'm not a fan of vanity metrics. I don't want to overstate things when I say 31x. I don't want to make it sound like that was all attributed to us. I give full credit to the CEOs, the people who are actually working on this for years, and as an agency, we're working on their behalf. But what I want to do with analytics is find elements that I can scale that will scale the results. So Facebook advertising is a focal point, not only of digital advertising, but digital marketing as a whole. Facebook advertising is a key driver for equity crowdfunding campaigns and raising private capital online from high volumes of investors. Facebook gives us an advertising pixel, which is essentially a tracker that allows us to see who clicks on an ad and then within 28 days completes an investment, who sees an ad and within 24 hours completes an investment. So the view through attribution is one thing, the click through attribution is even stronger. I don't need to pinpoint any of them. What I need to do is be able to see what conversions I can scale. So if I'm running ads to 4 different audiences and I'm seeing a cost per acquisition of $150 from one of the audiences, where if I'm getting a $1,500 average investment, that's a 10x return on ad spend. I may want to spend more there, particularly if my other CPAs are $200, $300, $400. If I increase the daily spends on that audience to that's hitting $150 cost per acquisition of each investor, and I see the investments increase at scale with how I up to the budget, I have something there. If I increase the budget and nothing happens and I'm just paying twice as much for the same investors, it doesn't mean anything to me. I only want to look at analytics as a roadmap on what I can optimize, what I can scale to improve the client's performance. So I can look at Google Analytics and see how traffic's performing on all my organic channels, on my paid channels. I'll give you a hint: Facebook and Google don't play well. There's always going to be a discrepancy between Facebook and Google numbers. I have a lot of theories behind that. But and then looking at the conversion windows, the conversion window is the 1-day click view through, 28-day click through, as I was mentioning. I can look at all these. I present them in weekly reports to clients and talk about what occurred as if it's a stock that they're investing in. Here's where it went up. Here's what went down. Here's what we're testing next week. We're always coming to the table with new ideas. But again, when it comes to attribution, I'm looking at what the platform's telling me. Paid media makes it much more straightforward with the analytics that are available, but the reports are only as good as the results I can produce when optimizing towards what's being defined to me in the report. So Facebook advertising pixel, it gives me attribution windows, but the real magic happens afterwards. And if I'm able to make changes that produce higher volumes of investors, that's where I'm able to really point at the attribution and say, this is working.
Yeah, we've looked into this because we run our own Facebook ads for founders on the platform, as I think you know, like as part of our fee. And so, you know, we have a contractor who does that. And so, you know, we've looked at attribution. We ran a test because we're roughly getting, I want to say, we're on average, we're getting like a 15, 20x return. That's, I think, very high because we're able to, retarget our investor base quite easily. And we're always sensitive about saturation of ads to our investor base, both on email and other channels. But yeah, so our ROAS is very good. But then I was kind of looking at it like, is this really attributed to the Facebook ads? So initially we had a one day view window and a 30-day click window, right? But then basically what I saw was when we send emails as WeFunder, then we see the Facebook ROAS numbers spike, right?
Correct.
Or like when the campaign is closing, then we see the Facebook ROAS numbers spike. And that just made me pretty nervous, especially with the 30-day window, because it's like, how can it seems to me that those investments are being driven by that email we sent rather than the Facebook ad. So we shortened the window from 30 days to 14 days, which I think should probably help with a cleaner attribution. The other thing we did was we looked at there's a test that you can do on Facebook ads. I can't remember what it's called. It's like an A/B test or a control test or something like that. I can't remember the name, but it's basically a controlled experiment where you can try to back out of true attribution. And we saw roughly a third drop. So, we went from maybe, 20x to like 13x or something like that. When you kind of normalize and control for it. So that was quite an interesting test. That being said, I will say that the Facebook test was, I did not trust it because we looked at the data and it was like, we ran it for 2 weeks and it was like saying, there's like, 60% attribution. And then on the last day, it like totally flipped and it just really undermined my confidence in the data. But anyway, it's something we've looked at from our one data point of trying to analyze this in a way through Facebook's A/B tests that I don't really trust the data that much. We found about 2/3 was kind of true attribution and 1/3 was, kind of a little bit overly exaggerated, maybe from capturing it from other channels that were kind of driving it more primarily.
But everyone trusts Facebook. I don't understand what you mean.
Hey, I got a question for you, Jason.
Yeah.
If you're designing Facebook ads for a founder, what are the 3 most important, maybe not most important, because if everyone knows it, then that's less valuable, but what are some of the key things which you definitely got to do and maybe some people wouldn't necessarily think to do?
Yeah, I could give some actionable tips. Absolutely. So when creating a Facebook advertising campaign, and by the way, we look for those actionable insights as you were talking about. We're not looking into fluff and various types of vanity metrics just to say something looks good. So when setting up a Facebook advertising campaign, we'll begin with 4 to 10 audiences, 2 to 6 different creatives for each audience. A creative is an ad. And if you can customize the messaging, customize the images in the ads, you should see a stronger level of performance. I live in Marina Del Rey. If it says, hey, investors in Marina Del Rey are paying a lot of attention to this deal, I'll probably may pay more attention to the ad. Mm-hmm. So even if it's just a geo-targeted separation of audience. But, to your point, being able to use custom audiences is a big deal. Being able to, for us, we'll run advertising campaigns to collect pools of investors who are interested in equity crowdfunding deals. And then we can run ads to those audiences where we're going to see a stronger level of performance. If we work with portals such as WeFunder, if we work with funds, if we work with various types of investment banks and get access to their investor audiences, Facebook allows us to share custom audiences without transferring ownership of data. We could run ads to groups. We don't know anyone's name or phone number or anything like that, but we could run ads to those type of groups, and we could compare the results from one audience to another. We could compare the results of the ads that are running to those audiences against one another or within any of the targets in general. We could create lookalike models. Facebook doesn't even tell us how they do it. They just say, hey, here's people exactly like who you're targeting. Voice data and things like that are rumors, by the way, but they don't even tell us how. We just know it's highly, highly effective. Then you have retargeting. Retargeting means we're running ads to people who have been to our clients' WeFunder pages or to their landing pages or to any other page that we want to tag a pixel to. So we can run ads to those audiences over and over and over again. Going back to vanity metrics, if all we ran was retargeting ads, we'd see an amazing ROAS. Return on ad spend, because we're
which is I think why our internal advertising is doing so much better, because we cannot quite get the prospecting to work. We're experimenting constantly with prospecting, haven't quite yet nailed it. If we can, that's an absolute game changer for our business. But yeah, we're focused on retargeting, which is why I think, to your point, we're seeing much higher ROAS. Well, not much higher. Like, you guys are pretty, if you're at like 10 to 1 for an average campaign, we're pretty similar. But yeah, as you say, if you were just solely focused on retargeting, you'd be even higher.
Yeah. So recommendations for anyone who's looking to raise funds and use Facebook ads to do so: set up 4 to 10 audiences, 2 to 6 ad creatives each. Once you have 100 to 1,000 clicks per advertisement, or at least per audience, you have a minimum level of sample data to then optimize towards. You want to optimize towards your click metrics until the conversion metrics are strong enough. Once you're actually able to make optimizations based on return on ad spend, based on cost per acquisition, based on the conversion rate, that's where you're going to be able to make the most meaningful edits. However, before that, you're going to want to look a little higher funnel around click metrics, and then optimize towards what's working. Make sure there's enough running at all times. We're always testing new audiences. That way our hands aren't tied to any one thing that is working. Show third parties. If anyone's on WeFunder and they're not showing you, Jonny, they have a huge missed opportunity. Talk to third parties. We look at campaigns all the time and look to play a resource based on our insights and providing recommendations, and do whatever you can to find those opportunities to scale. Going back to your point about, hey, we were seeing some performance from ads. We weren't sure what was from emails, what wasn't from ads. As a marketing agency, we get tasked with very aggressive goals of, hey, we're getting decent performance. We need to have it at a much higher level. How do we do that? And it's going back to these audiences. It's going back to these creatives, testing out to find new scalable traffic sources that will work and can be replicated. Without that, we're just flexing and we're saying, hey, we had a great week with retargeting last week. It has to be campaign wide. We've worked with some brands on 3 separate rounds now, going from a Reg D, from accredited investors, to CF, to Reg A. I mean, that is really what we're set up to do. So if we're not always coming to the table with 3 new ideas of what we can test next that are going to increase performance, we're underserving the client. So it goes far beyond the attribution. That's a good, it's for us to center our conversations. But we really always have to be looking for what's the next thing, what's going to bring the next audiences, what's going to actually allow our brands to hit their hard cap, whether it's in, you know, an economic crisis or even before this as well too, just even more so now. We have to constantly be testing out new messages to new audiences who actually have funds they're looking to deploy. We have to be very creative on where our clients are going to get their next dollars.
Cool. I think there was a question in the chat, maybe.
Is it a good question?
Actually, the question was, when will we be able to ask questions? So.
Yeah, we have 8 minutes. Let's open it up to Q&A. I don't have a hard stop at 11 either, so you know, could get these answered. Yeah, you wanna take this one, or how should we go about this?
Go ahead, Christian. Hello, you're on mute.
Hold on. Can you hear me now?
Yes.
Oh, hi. Hi, everyone. Hey, thanks, guys, for this really great conversation here. A lot of things to learn here. Jason, this question is for you.
Sure.
So, what kind of channels do you prefer to use when you deploy a client's campaign, when it's the first time that you work with them?
Good question. So mapping that out in the strategy, we look at paid and organic channels that could produce, and then prioritize with the client over different reporting calls on which to begin with. Budget obviously plays a huge role in this. Timeline, likewise, different channels take longer to be fruitful. So mapping it out, I'd like to say, 3 channels, 5 channels is where you want to start. Given budgets and timelines, we're often tasked with only 1 channel at a time and then adding additional channels as it's producing. I highly recommend content marketing and having a strong funnel, as it's going to improve your conversion rates. Then and that can have 3 to 5 channels on its own, and they can be done in a lean way. Then when looking at advertising, beginning with 1 channel, I would point you towards Facebook advertising. Depending on the pixel placement, you may want to look at display retargeting and at a low budget level thereafter, which is a 2nd channel. We've seen search to be hit or miss for these fundraising campaigns. Some campaigns have produced outstanding performance in comparison to industry averages. Others have produced 0. So, any of these you want to test, optimize, scale. But to answer your question, outside from a number, the volume should be something that you can manage either internally or with your third parties, with extra time for optimizations, with extra time for new creative and audience ideas each week.
All right, thank you.
Yeah, hope that's helpful. I see a Q&A here from an anonymous attendee. In your experience, which targeting has been more productive? And they have 2 different bullets listed. Interest purchasers of the actual product industry. This is a good question. Or 2, investors interested in promising companies regardless of their interest in the actual industry the product falls under. Jonny, you want to start with an answer there?
Yeah, I was just typing one. I think for me, the intersection is ideal. So obviously, if people are investors, if you don't have to get them over the hump of equity crowdfunding, what the hell is this WeFunder thing, creating an account on WeFunder, and also investors tend to have money to invest, and more money, so they'll write you a larger check, which obviously drives the ROAS, as well as the number of clicks and investments you get. So generally speaking, obviously it's great if they are investors, which is why if we can retarget our investors, or if Jason's building up a database of investors in equity crowdfunding deals, that's a powerful asset. But on the other hand, yeah, if they are very interested in a particular sector or stage of companies, and even better, if they are a customer, you have an investor that is a customer or lives, like for Lost Spirits, right? Probably a lot of people in that neighborhood know about that place. Or when Meow Wolf in Santa Fe, New Mexico, raised $1 million in 2 days on WeFunder, everyone in Santa Fe knows about Meow Wolf. So if you're targeting an investor who lives in Santa Fe, they're going to know Meow Wolf, and you get the best of both worlds. So bit of a cop-out answer, but that's probably what I would say. If I had to choose one, this might surprise you given what I just said, but if I had to choose one, I would say honestly, especially if you have customers that love you.
Yes.
If on WeFunder, if you have a big audience of customers that absolutely love your product and love your brand, then you're going to have an explosive campaign, and marketing to those guys will see very, very strong return on ad spend. If you just graduated from Y Combinator, if you have a PhD from MIT and you're building an AI company, if you have a hockey stick growth chart, then if you have a business that is super investment worthy, the ROI from pitching advertising to investors is going to go up. But I think generally speaking on WeFunder, I would say you see the higher ROI from pitching people that already know you, already know your brand. And if they love that brand, then if you say, hey, you get a chance to be an owner of this company, that's a pretty powerful pitch.
Absolutely. And I can't emphasize the user owner or customer owner concept enough. It's really what turned me on to equity crowdfunding, where they gave an example of a reward crowdfund of Oculus Rift, the headset. 6 months later was acquired by Facebook for something around the lines of $1 billion. If that were equity crowdfunding, those users, those customers would have benefited.
Would have made so much money. Oh, that's such a shame. Yeah.
That was the light bulb moment for me. Other light bulb moments actually pertain to WeFunder. And before we started running campaigns on there was a few breweries that I think raised the full Reg CF cap in the matter of about a month. And they would take customers, approximately 3,000, putting in somewhere about $300 each, and close out their Reg CF cap in a very small window of time. So we set that out for our clients, where we're looking at their customer base. We're looking at those Facebook lookalike models of their customer base. We're looking at future customers of theirs and finding that affinity, then filtering it down by things like household income, net worth, investor behavior, so that we can find investors who have an interest in this industry. We even do it for Reg CF campaigns pre-launch because you can't announce the deal. You can't announce the offering. However, we could do audience building. So if I'm targeting someone who has an affinity for a social cause, which we're doing today, if I'm targeting someone who has an affinity for an industry, but also filtering them again by household income, net worth, investor behavior type data sets, I can be building this audience of thousands of people. So once the Reg CF becomes available, now I can announce an offering and say, hey, guess what? This product you love, why not participate in it?
Right.
Why not become a shareholder? We're doing a round right now. You can have an interest in this while it grows. They get to the offering page, they see, the overall revenue model and numbers, and we get conversions in a much quicker level. They're already mid-funnel, lower funnel. Now, that's not to say to the question that you don't A/B test various types of investors, but just to announce that we have seen strong traction from people who have an emotional connection to an industry, or like we're seeing here in March, like we're seeing here in April, a social cause.
Love it.
Any other questions or anything that has been submitted thus far? I think that's about it. And it looks like we're at our time here for 11 o'clock. I want to finish off, and Jonny, if you have any parting thoughts as well too, just to say that it's very exciting for us to be part of equity crowdfunding today. With all of the movement, as I mentioned, Reg CF's going from 1.07 to 5 million. WeFunder just announced they had one of their best months to date. And from what I'm told, the inquiries just keep increasing because of the needs with the lack of VC and other types of groups that are operating today. So this is a massive point of growth. This really decentralizes investment opportunities and makes them available to everybody. And that's why I think us being at home, using the digital channels more is just naturally going to lead to more funding for startups, more funding for early to mid-stage organizations that are looking at their next stages of growth. So I want to make myself available to any questions. Feel free to contact me directly. Use me as a resource. I know Jonny and his team go above and beyond in playing that role in the community. So, it's great that we're all on the line today. These are exciting times for what's available in numbers, what's available with large pools, with thousands of investors towards one offering.
Yeah, thanks for having me on as well, Jason. And just on my side, my email is jonny@wefunder.com, jonny@wefunder.com. And you can go to wefunder.com and click on raise money if you want to start an application and explore running a campaign with us, especially if you're looking at raising capital in the coming months. And we hope that our model can help a lot of startups to make it through this crisis. But yeah, fun conversation.
Absolutely. I posted my email address as well. Thank you everybody for attending, and feel free to get in contact with us, and let's keep the conversation going. Have a great Friday.
Love it. Cheers, guys.
Take care.